I mean, looking on the surface, not a lot to complain about. You know, 5,500 on the S&P. The VIX is now below 12 as it's trading right now. The macro seems quiet enough for stocks to kind of rotate and do their thing. Is there anything you would look at and say, we're missing something here? The market maybe is either too complacent about something or it's got it right?
Well, I mean, we're not going to appreciate every quarter the way we did Q4 last year, Q1 this year. So, we'll take, whatever, 4% and change a quarter every quarter forever would be fine. I think the three kind of bull sort of legs of the stool are in case, right? Margins are going up for the average company. Financial conditions, at least if you look at Chicago Fed or, the Bloomberg financial conditions, other look pretty easy. And this dream of AI earnings growth, what it could do years 3 through 10 or whatever, still seems pretty dreamy, right? So I think that's intact. We'll see. I'm not expecting to get any major negative pre-releases on earnings this week. It's a little bit of a weird week with the holiday in the middle of the week. And normally, when you get worried, you're worried about a reset to second half of the year earnings revisions. I don't think we're going to get that. So I think so far, there's a sort of a positive skew to the outcomes. But the way you teed up that question, could anything worry me? Of course.
Well, of course, yeah. You could always go looking for something, without a doubt. And, to be honest, it's been a mantra of yours that the margins for the average company are going up. If that's the case, why isn't the stock price of the average company keeping pace or even going up in the last 3 months?
Obviously small caps are down. Look, one of the consensus things, we're doing our big second half of the year outlook webcast next Tuesday. And one of the things I like to do is look at what the consensus view is. So I had an intern read 15 of the second half outlooks from all over the place. Yep. And there is one kind of consensus out there that small caps are going to do well. And I think it's always prudent to disagree with the consensus, or at least on average, that feels right. And in this case, I happen to, from all the data, I don't think small caps I think they're an inferior asset class, to be honest with you. I think a lot of them have structural issues. They don't have the same constitution in terms of tech and industrials and some of the themes you want to be overweight that are growing faster than GDP. So I think a lot of it is their outlook is just not as good.
But even the median company in the Russell 1000 large cap, is obviously there's always something working and not working. But I'm just curious if you feel as if the market is essentially waiting for the demonstrated resumption of earnings growth at the average company in the third or fourth quarter of this year.
Probably there's more downward revisions coming to the small caps than the large caps. So it's all like a anticipated relative revision game. The second half of your numbers always go up. I think there's like a human optimism where 6 months forward, the back half of the year is going to be better. In this case, the hockey stick in the back half is a little bit bigger than average. So I think to the extent that you're worried that people come back, usually in September, we found the biggest monthly revisions in the month of September. I think it's because the New York folks come back from the Hamptons or Cape Cod in Massachusetts or wherever Californians and Texans go, and they sharpen their pencil in September and they say my numbers are too high. I don't know we're going to hear that in July. I think maybe we'll get a little bit of downward guidance, but I think for this July earnings season. I think you come back September, that's when maybe the average company, the median company, has a little bit more risk to their numbers.
Yeah. I guess the other question is you talk to clients for the most part, whose job it is to create value over and above what the index can give you. And it's got to be frustrating. It's got to be as if they are competing against this indomitable force because of the AI-driven moves in the mega caps. But I also feel like that actual frustration I've been making this argument for a couple of weeks, it's almost kind of rebuilt the wall of worry. Even though the market itself's at a new high by the index level, it's sort of as if people are kind of not fully trusting what's going on. Does that make sense?
Yeah, look, I mean, the biggest 5 companies are 30% of the S&P now, so it's become, my view for the last 3 years has basically been, I don't know anything about the big companies that nobody else does. Hundreds of analysts cover them. They're pretty macro stocks. Market goes up, growth beats value. Microsoft usually goes up, right? And, it's just hard to know something that nobody else knows. So I'd rather be market weight that group, if I'm long only, and then take my shots elsewhere where the company-specific risk is higher and where being a fundamentalist can add value. Is there a divestiture? Is there a deal? Is there a litigation? Is there a complex capital structure? Are they deploying capital in an interesting way? I think that's where the analysts should focus and where they can take bigger bets than normal. So, look what the market's rewarded, Mike. It's been concentrated long onlys, run 8-10 stocks. People love that. It's been huge gross exposure with low net, the multi-strats are delivering double-digit returns, or it's you got to take huge risk and be right. But the traditional kind of diversified thing, it hasn't worked for much of the last decade.
Yeah, no, it's absolutely true.